It is 9:38 a.m. Pacific Standard Time. It's the 21st day of November 2025, and this is episode 1216 of Bitcoin. And what do I got up on the tray for serving today? The Bitcoin for America Act. This is going to be kind of fun. I doubt anybody's actually going to use it, but, you know, it'll be interesting if they did. Then we're going to run on over and look at an investigation by the United States into Bitmain. Something about it being a national security risk. It may be the firmware connected to, you know, the internet. Who knows? But we're gonna talk about it. We're also going to talk about a statement that Michael Saylor made on X sometime early this morning, trying to dissuade fears that everybody has through this very clear downturn. 35% downturn in Bitcoin. This is like what, the 17th 35% downturn in Bitcoin that we've had? Maybe 20th? There's been a lot of them. This is definitely not the first time in this rodeo. But then we've got some economic news that we're going to run right before we run the numbers. Coming out on the other side, we've got prediction market Kalshi's valuation changing. Yeah, it's gambling apparently is just everything to us now. We've got to gamble on everything to the point that Kalshi is a prediction market. Well, we'll talk about it. And then 3x Bitcoin futures. It's like a prepackaged gambling token. Yeah, you know, it's like it's not even bespoke. You can't even select your own leverage. It just comes out as 3x leverage Bitcoin product. We'll run through the parameters of that one. And then John Carvalho, got a brief interview with him from Atlas 21 where he answers some questions about what he's been up to. Maybe he'll update us on PubKey and some of the other things that he's been into, because he does have interesting projects. You say what you want about John. Good Bitcoiner, solid Bitcoiner, been here for years and years and years, and he does have some interesting projects. I disagree with his stance on nostr, clearly, because he doesn't like nostr and he thinks the energy that I get from John on nostr is that he thinks it's stupid, silly, and a waste of time, and I think none of those things. I think nostr is one of the most important infrastructure build-outs on a free open source software scale in the history of humanity, trailing very close right behind Bitcoin. So let's get back to the front and get into this one from Bitcoin Magazine. Micah Zimmerman writing, Congressman Warren Davidson introduces Bitcoin for America Act. It proposes federal tax-free payments in Bitcoin. Okay, well, Warren Davidson introduced today the Bitcoin for America Act in the House of Representatives, a landmark proposal designed to modernize the United States financial system and position the nation at the forefront of the global digital asset economy, because that's always a term that we use. We're going to be at the forefront of X, Y, and Z. We're going to be the leaders in X, Y. It's just suit speak, but the bill would allow Americans to pay federal taxes, your federal income taxes, your business taxes, whatever, your federal taxes in Bitcoin, with all the proceeds deposited into the newly created Strategic Bitcoin Reserve. Quote, by allowing taxpayers to pay federal taxes in Bitcoin and directing those funds into a Strategic Bitcoin Reserve, the nation gains a tangible asset that appreciates over time, unlike the US dollar, which is susceptible to inflation. This bill strengthens the nation's financial foundation and positions the U.S. to lead, not follow, in the global race towards sound money and digital innovation. A race towards sound money. We'll say that again just for effect. A race towards sound money. We used to have sound money until you guys screwed it up this is what are we racing backwards? Are we trying to travel back through time so that we can find what we've lost because we decided to destroy it? How is this a race towards something that we've already had and screwed up? I think this is a terrible choice of words. In fact, he could have made that statement very much stronger in the face of Bitcoiners by recognizing we used to have sound money, but it has been so effectively destroyed forever and ever and ever that now we have to actually go towards the future and revitalize, rescue the concept of sound money back from the clutches of idiocy and incompetence. But that's just me, and whatever. Under the proposed legislation, taxpayers would be able to transfer Bitcoin to the Treasury or to approved financial agents designated by the Secretary of the Treasury. The transferred BTC would count as full satisfaction of tax liabilities with no capital gains recognized on the transaction. Fair market value at the time of transfer would then determine the amount credited, similar to how foreign currency payments are handled today. The bill also empowers the Treasury to establish robust custody measures for the strategic Bitcoin reserve. Provisions include cold storage, multi-sig wallets, and geographically distributed storage facilities. Bitcoin deposited into the reserve would be held for at least 20 years, according to the bill, with limited scheduled dispositions allowed only after that period, ensuring the assets are preserved for future generations. The legislation is intended to bolster national financial resilience by diversifying U.S. assets into a non-inflationary, appreciating store of value. The 21 million coin supply of Bitcoin creates inherent scarcity, offering a hedge against long-term currency devaluation. And Davidson and supporters argue in a conversation with the Bitcoin Policy Institute that this move reduces reliance on debt and strengthens the U.S. balance sheet. Other major nations like China and Russia are already accumulating Bitcoin, Davidson contends. And by adding Bitcoin into federal finances, he believes the United States can maintain its competitive edge in the digital economy. Quote, other nations are actively acquiring Bitcoin to diversify reserves and protect against global financial instability. The United States risks falling behind unless it takes a similar approach. And that language is a quote written directly into the bill itself. In his conversation with BPI, Davidson discussed the long-term national benefits of the bill, noting that if the United States had been accumulating Bitcoin since 2012, it could help address the nation's 38 trillion, that's trillion with a T, amounts of debt. 38 trillion in debt. That's reprehensible. Anyway, Davidson also stressed that the bill is opt-in and democratic, explaining, quote, every American can basically make the choice at the end of the year to contribute to the reserve, end quote. On the broader vision for sound money, he argued, quote, money is increasingly designed as a surveillance system. Bitcoin's premise is kind of a return to sound money, separating money from the state. Oh, that's not going to make him any friends in Washington. The act also highlights Bitcoin's decentralized permissionless system as a tool to expand financial access. By enabling payment of federal taxes in Bitcoin, the government can provide more Americans, including unbanked or underserved populations, an opportunity to participate in the digital economy. For context, back in March, the U.S. formally established a strategic Bitcoin reserve via executive order signed by Trump, making it the largest nation-state BTC holder with an estimated 200,000 Bitcoin. Funded entirely through government-held assets seized in criminal and civil proceedings, the reserve costs taxpayers, well, nothing. The order mandates a full audit of federal BTC holdings, prohibits any sales from the reserve, and allows budget-neutral acquisitions of additional BTC. And it's that last phrase, allows. Actually, it doesn't allow. The strategic Bitcoin reserve requires the addition of Bitcoin, but only through budget neutral acquisitions. And what Davidson is saying, and by the way, that's the end of the article, what Davidson is proposing here in this bill is exactly that. It is a budget neutral acquisition of Bitcoin. Here's the problem. The United States government burns through tax receipts. You know, when we pay our taxes at various times of the year, they burn through that like it's, I don't even know how to describe it. It's like setting gas on fire. It just like we get it and it's immediately gone. So what Davidson proposes is going to be a big problem for all the spendthrifts in Washington, D.C., because they hate holding money. They've got to give it to their friends. That is absolutely required of them at this point, to make sure that they give all tax dollars to a whole bunch of idiots who don't really know what to do with money except, I don't know, whatever it is that they do. You get my point. So how Davidson's going to get this bill to fly is beyond my wildest imaginings, because if we were to just leave Bitcoin out of it entirely, what this bill is suggesting is that the United States government save money. I don't think that they're prepared to do that. Let's move on. Bitcoin ASIC producer Bitmain under U.S. investigation over national security risk. Cointelegraph Adrian Zmunsky is writing this one. The leading Bitcoin mining application-specific integrated circuit manufacturer Bitmain, based in China, is reportedly under investigation in the United States over national security concerns, according to a Friday Bloomberg report. An unspecified U.S. official and 6 other anonymous people who are familiar with the matter said that Bitmain's hardware is at the center. The hardware is at the center of a federal investigation known as Operation Red Sunset. Wow, y'all need a better marketing team. The investigation, led by the U.S. Department of Homeland Security, those dipshits, reportedly seek to determine whether the ASICs could be remotely controlled for spying or to sabotage the U.S. power grid. Again, that is not how this works. God damn it, that's not how this works. Okay, I gotta calm down. U.S. authorities previously investigated Bitmain-linked Chinese chip designer Xiaomin Sophago, over an alleged business relationship with U.S.-sanctioned company Huawei in October of 2024. And then it was followed by the U.S. Customs and Border Protection Agency halting the delivery of thousands of Bitmain ASICs the following month. Authorities only began releasing the hardware in March of this year. Consequences for the U.S. crypto mining industry could be far-reaching, since Bitmain controls over 80% of Bitcoin mining ASIC markets, according to a Cambridge report, that is. Chinese dominance in the industry is even more ironclad, with both Bitmain and the second largest manufacturer, MicroBT, based in mainland China, controlling 97% of the market share on their own. Holy smokes, that's not good. In some cases, investigators even disassembled Bitmain ASICs to look. They actually looked for malicious capabilities, the anonymous officials told Bloomberg. They declined to say if anything was actually found, though. A Bitmain spokesperson told Bloomberg that it is unequivocally false that the company is capable of remotely controlling its machines. Okay, that's a bold-faced lie right there. I'm not on anybody's side here, okay? Bitmain actually could remote control their machines, at least in one aspect. Back in 2017, when the block size wars were on fire, we discovered something called ASIC Boost. And it turns out that Bitmain had a stealth software package. Software is a bad word. A stealth code package that was in their firmware, and they could flip a switch and they could control that firmware, but it basically had it had only to do with hash rate or how the hashing was actually going to take place inside the machine. It couldn't do anything else. It couldn't reach out to the transformer of the machine and say, "Hey, screw up the entire US power grid with your, 240 volt transformer here inside this box." It's just ridiculous. Anyway, the company representative claimed that it strictly complies with US and all applicable laws and regulations and has never engaged in activities that pose a risk to US national security and is, of course, unaware of the investigation. I guess you're aware of it now. Imposing restrictive measures on Bitmain machines is also likely to lead to consequences for Trump's family. In August, a Bitcoin mining company backed by members of Trump's family, American Bitcoin, acquired a fleet of 16,300 Antminer units from Bitmain, and the company also inherited substantially all of Hut 8's ASICs, and that includes the 31,145 Antminer S21 Plus machines that it acquired about a year ago. In September, American Bitcoin announced that it has preferential access to next-generation ASIC compute infrastructure without explicitly citing Bitmain. U.S. Securities and Exchange Commission filings also revealed that American Bitcoin paid through the pledge of Bitcoin with a redemption period of 24 months from each pledge date, terms which the Guardian reports are unusually generous. With Bitmain so dominant in the space, American Bitcoin is far from the only U.S.-based crypto mining company that may be affected by the findings of this investigation. The industry already got a taste of what might happen when, in mid-February, publicly traded mining companies in the U.S. felt the effects of trade tensions between the United States and China through delays in receiving shipments of their ASICs. Yes, we know all that. I can't look. Who makes all the servers that sit in Amazon's warehouses that handle all the back end for Amazon Web Services, AWS? Are they fundamentally different machines? Are they fundamentally made by different manufacturers? Do you really think that all the servers being purchased by Amazon are made in the United States? No, they're not. All right, they may not be made by Bitmain, but China. I'm sorry, it's just, we don't make machines anymore. Not really. Dell might still dabble in it a little bit, but I can pretty much feel confident in saying that most of the machines that we purchase for compute infrastructure, whether for high performance compute or AI or just server stuff at universities and AWS and Costco, whatever, is probably made not in the United States. And the chips certainly aren't. That hasn't been true for years. So what's different about Bitmain? Why? Is it because it's ASICs? Last I heard, ASICs can't do a damn thing but perform the SHA-256 algorithm. So I'm pretty sure it's not in the ASICs side of the equation that they're worried about. So is it the firmware in the controlling aspect of the ASIC that's somehow different and inherently malicious? It's different. Oh, it's different than all the computers at Amazon warehouses. See, this is all bullshit, and I don't know why they're even going after it, but, they're going to do what they're going to do. They sure as shit ain't going to listen to me. And neither is Michael Saylor, because he's already dismissing everything, right? So here we go. Micah Zimmerman writing this one for Bitcoin Mag. Strategies, Michael Saylor dismisses index concerns. Quote, "Our conviction in Bitcoin is unwavering." Well, that's good to know, Mike. Saylor pushed back on recent reports warning that Strategy could face billions in passive outflows if MSCI excludes the companies from major equity indices. In a statement on X, Saylor said that Strategy is, quote, "not a fund, not a trust, not a holding company. End quote. He described the firm as a publicly traded operating company with a $500 million software business and a unique treasury strategy that uses Bitcoin as productive capital. Saylor highlighted the company's recent activity, including five public offerings of digital credit securities: STRK, STRF, STRD, STRC, and STRE, representing $7.7 billion in notional value. He also pointed to Stretch, the STRC side of it, a Bitcoin-backed credit instrument that offers variable monthly USD yields to institutional and retail investors. Quote, funds and trusts passively hold assets. Holding companies simply sit on investments. We create structure, issue, and operate, Saylor wrote. Quote, no passive vehicle or holding company could do what we're doing, end quote. He described Strategy as a new kind of enterprise, a Bitcoin-backed structured finance company innovating in both capital markets and software. Saylor added that index classification does not define the company. Quote, our strategy is long-term, our conviction in Bitcoin is unwavering, and our mission remains unchanged: to build the world's first digital monetary institution on a foundation of sound money and financial innovation. End quote. The statement comes as JP Morgan analysts warned that MSCI's potential exclusion of Strategy from all major indices could trigger $2.8 billion in outflows, rising to $8.8 billion if other index providers follow. Strategy's market cap sits around $59 billion, with nearly $9 billion held in passive index tracking vehicles. Analysts said any exclusion could increase selling pressure, widen funding spreads, and reduce trading liquidity. Strategy's inclusion in indices such as the NASDAQ 100, MSCI USA, and MSCI World has long helped channel the Bitcoin trade into mainstream portfolios. However, MSCI is reportedly evaluating whether companies with large digital asset holdings should remain in traditional equity benchmarks. Market participants increasingly see digital asset-heavy companies as closer to investment funds, which are ineligible for ineligible for index inclusion. That's a lot of ins. Anyway, despite all the recent Bitcoin volatility and concerns about potential outflows, the company continues to pursue its long-term vision of a Bitcoin-backed financial enterprise aiming to create brand spanking new financial products and a digitally native monetary institution. On October the 10th, Bitcoin and the broader crypto market crashed. Some believe it was because Trump threatened tariffs on China, but some contend that the broader crash was triggered when MSCI announced it was reviewing whether companies that hold crypto as a core business, like Strategy, should be classified as funds rather than operating companies. And some contend that smart money anticipated this risk immediately after MSCI's announcement, leading to the sharp market drop, with the outcome now hinging on MSCI's January 15th, 2026 decision. So, January 15th is a red letter date as to what their decision is going to be. But before we finish this off, I want to make a statement here. Micah in writing this piece is sort of throwing it out to us that it was either the China tariff threats on October the 10th or the whole thing with MSCI announcing that it was reviewing whether companies that hold crypto as core businesses should be classified as funds rather than operating companies, which changes the entire landscape of what's going on. How is it not both? They both happened roughly around the exact same time. They both, I mean, honestly, they're both negative energies. So when you add them together, they're going to be even more negative. So how is it one or the other? It's not. It's both, right? We have cascading pieces of bad news that keep coming out. The world's economy, we keep looking at Bitcoin like it's, oh, look what's happened to Bitcoin. It's not that. Bitcoin is it's like holding up a giant globe that is a mirror, like literally a sphere that is a perfect sphere and a perfect mirror, and it mirrors everything that is around it, including the happenings of the global economy. I don't think it's fair to blame Bitcoin for the fact that Bitcoin's price went down. We've got to look at what Bitcoin is reflecting back to us. And we do that by recognizing that its price has dropped by 35%. Okay, well, what the hell's going on in the world? Stop looking at the price of Bitcoin. What the hell's going on in the world? Everything is on fire. It's look at like people like Peter Schiff are like, look, man, Bitcoin sucks. It's like, do you have any capacity to look beyond anything and say, well, why is it doing this? And people who is like, yeah, people are just tired of Bitcoin. Nope, that's not it. The world's economy is burning to the ground as we speak. Nothing can be done to stop it. It's an inevitability. We've fucked the money so thoroughly and so soundly that there's no rescuing anything from the current situation or the past. We have to go with Bitcoin. Continuing on, earlier this year in an interview with Bitcoin magazine, Saylor outlined an ambitious vision to build $1 trillion Bitcoin balance sheet. He wants to accumulate $1 trillion in Bitcoin and growing at 20 to 30% annually. From this base, Saylor plans to issue Bitcoin-backed credit at yields significantly higher than traditional fiat systems. He anticipates this could revitalize credit markets, equity indices, and corporate balance sheets while creating new financial products, including higher yield savings accounts, money market funds, and even insurance services denominated in Bitcoin. So even though Strategy stock is not doing good, like it's down $167.95 a share. Wow, that is. But then if you actually go look at the chart of Strategy and you look at it from like a long time scale, it was trading at $13 a share, $10 a share, $11 a share years ago. Would you like $10 a share? Or would you rather own it at $167.95 a share, especially if you bought it at $10 a share? This is not that hard of a decision to make. I'm just saying, I think people put too much trust in Saylor, but I also think that they put too much blame on Saylor. Saylor's just Saylor. He's just a dude. He's got 3 yachts. My question about Saylor is, why do you need more than 1 yacht? The only thing I can figure out is that he's a sailing buff, so therefore he's really into being on the water, I guess, and he needs more than 1 boat to do it. But it's a good place to get squeaky clean in the water, and you can do that with SoapMiner at SoapMiner.com. Handmade tallow soaps from SoapMiner at SoapMiner.com. That's SoapMiner.com. He's got all kinds of handmade tallow, 100% grass-fed beef tallow soap, cedar wood. Oh, he's offering a quintessential bundle. He's got a bundle of 4 soaps for $28. Of course, you can buy it all in Bitcoin. Pine tar, lavender, cedarwood, and lemongrass in a bundle. Nice. So he's got goat's milk tallow. He's got orange clove tallow. He's got tea tree tallow. He's got peppermint tallow. He's got Earl Grey tallow, which is one of my favorites. And my other favorite is redacted. Get your soap from SoapMiner.com. It's the best soap in the business, and he's a true Bitcoiner. Otherwise, he wouldn't be in the Circle P, where I bring plebs with goods and services just like you to plebs just like you who want to buy those goods and services, but you're going to be buying it in Bitcoin, because if you ain't selling it in Bitcoin, you ain't in the Circle P. Use the code Bitcoin and to get 10% off of your entire purchase at SoapMiner.com. Bitcoin and, use the term Bitcoin and at SoapMiner.com. Get 10% off, and it also lets SoapMiner know that I made the sale for him here on the Bitcoin and show, and then he can get me back on the other side with however many Satoshis he thinks the sale was worth. Okay, right before we run all of the numbers, let's get into this one from CoinDesk. Bitcoin bounces above 84,000 as Fed's Williams puts December rate cut back on the table. Christian Sandor, like I said, from CoinDesk. Bitcoin staged a modest rebound in the morning, U.S. hours Friday after a 10% sell-off overnight as the likelihood of a Federal Reserve rate cut in December jumped sharply following dovish remarks from New York Fed President John Williams. Quote, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral. Wow, that's an interesting sentence. Quote, looking ahead, it is imperative to restore inflation to our 2% longer run goal on a sustained basis. It is equally important to do so without creating undue risks to our maximum employment goal. End quote. Williams' comment stands in stark contrast to those of leading Fed hawk Cleveland Fed President Beth Hammack, who yesterday more or less brushed off any labor market worry, instead choosing to focus on inflation and what she believes is a bubbly stock market. Oh, it's bubbly. Remember, if it's not from the Champagne region in France, it's just a bubbly stock market. Williams commented he had immediate effect upon hitting the tape, sending the price of Bitcoin from about 81,000 to back above 84,000. It was trading at 83.5 at press time, still down 9.5% over the past 24 hours. The odds for a 25 basis point rate cut at the Fed's December meeting spiked to 70%, up sharply from just 39% a day ago, according to CME FedWatch tool. Okay, so at least one Fed governor is talking dovish, but choosing some language that I find rather odd. Let's just leave it at that, and we'll run the numbers. CNBC energy getting kicked in the crotch today again. Brent North Sea down another 1.6% to 62.33. West Texas Intermediate down 2% to 57.82. But here comes our savior, the hedge for energy that is natural gas. It is up 3.15%. It's so transparent, it's sickening. $4.61 per thousand cubic feet. Gasoline down 2.25 to $1.87. Merbon crude down 1.5 to 63.84. Metals are pretty much in the green today. Palladium is moving sideways. Gold is up 0.6% to $4,085. Platinum is up 0.4%. Silver is down 0.5. Copper is up almost a full point. Most of ag is in the green today. Biggest winner is rough rice, 2.6% to the upside. Chocolate getting squashed, 2.12% to the downside. Live cattle getting a bit of a reprieve, 0.15. Nope, just flipped over. A quarter point to the upside for live cattle. Lean hogs down 2.25%, so more McRibs on the way. Feeder cattle down 0.16%. And it looks like there's a rally in equity indices here. S&P is up 1.14%. NASDAQ is up 0.8%. The Dow is up almost 1.5 points. And the S&P Mini, oh man, 2.5% in the green side. Yay. But Bitcoin's at $83,760. A mere $1.67 trillion market cap. We can only purchase 20.6 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,951,629.29 of, and average fees per block are normal, 0.03. BTC taking in fees on a per block basis. It's about 27 blocks carrying 39,000 unconfirmed transactions waiting to clear. High priorities get you in at 3. Low priorities at 1 Satoshi per VByte. Hash rate, still in zettahash territory. 1.06. Yesterday it was 0.5. 1.06 zettahashes per second. is all the speed you need on Bitcoin. From Bitcoin Core on the Brink, yesterday's episode of Bitcoin and I Got God's Death, give me 237 sats, says, thank you, sir. No, thank you. 1,000 sats from Third Coast Hodl says, thank you for the help on Primal. I am still learning about nostr, so I just went with the tip here since I am familiar. You are more than welcome, sir. Nick Dose 107 says, cheers. Well, cheers back to you, pal. Richard Dick Whitman with 200 says, free samurai. I hear that, brother. Pies with 121 says, thank you, sir. No, thank you. And that's the weather report. Welcome to part two of the news that you can use. Prediction market Kalshi's valuation jumps to $11 billion after a reported $1 billion raise, Vince D'Aquino from Decrypt.co. U.S. prediction market platform Kalshi reportedly pushed its valuation to roughly $11 billion after raising $1 billion in a yet undisclosed funding round, according to an initial report from TechCrunch citing a source with knowledge of the deal. The rise in valuation marks one of the fastest step-ups in the prediction market sector this year. The company closed the round weeks after securing $300 million at a $5 billion valuation in October. Trading activity, market depth, and user adoption continued to climb into this year's final quarter. Kalshi's annualized trading volume reached about $50 billion last month, according to a report from crypto analytics platform CryptoRank. The figure marks a dramatic jump from roughly $300 million just 1 year ago. So from $300 million to $50 billion in volume in a year. That's impressive. It's sad because that's how much degenerate gambling we have going on, but I gotta say, man, that's impressive. Anyway, it has also outpaced Polymarket, its main rival in the space. Just last month, it generated approximately $4.4 billion in trading volume, surpassing Polymarket's $4.1 billion during the same month. About a third of bets on Kalshi are for sports-related markets, according to a Dune dashboard. Weekly notional volume among prediction markets have also been on a steady rise since September, according to a broader dashboard from the same maintainer. Sequoia Capital and Capital G reportedly led the deal, joined by, of course, Andreessen Horowitz, also known as A16Z, Paradigm, Anthos Capital, Neo, and other returning backers. Kalshi's raise just shows the ceiling is only getting higher for prediction markets, and we haven't seen nothing yet. Yeah, you haven't seen the depths of human degeneracy, is another way to phrase that one. But this was spoken by Farrokh Sarmad, co-founder and president of rival prediction market platform Myriad, in his discussion with Decrypt. I'm still reveling in just how degenerate we've become. Kalshi declined to comment for this article. Decrypt has reached out, blah, 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 blah. I haven't heard shit yet. Prediction markets have long faced legal friction in the United States, given how such platforms sit between regulated derivatives and prohibited gambling, creating a jurisdictional tension that has so far shaped the industry's growth. Let me pause. It sits between regulated derivatives and prohibited gambling. Derivatives is gambling, but it's allowed. Let's be clear about what a derivative is. It is not a price discovery mechanism. People will say that I'm wrong. And I'll get if I was saying that in the presence of a Nobel laureate economist, I'd be, of course, hogtied and laid out, on train tracks like a damsel in distress. And the guy's twisting his mustache. But I'm right and this person is wrong. Derivatives are gambling. Most of the economy is based upon degenerate gambling behavior. Derivatives, supra derivatives, X3 derivatives, leverage longs, leverage shorts, futures. We need them for price discovery. No, we actually don't. You know what we need for price discovery? I got 10 people in a room. How much do you want to pay for this barrel of oil? How much is it worth to you? Let the bidding begin. Auctions. That's how you get price discovery. And it just so happens the free market is the largest auction house in the world where everybody's bidding on everything else in real time. That's your price discovery. Derivatives, futures, leveraged, it's all bullshit. It's just gambling. It's just legalized gambling. Please understand that. When somebody tells you how important derivatives are to the market, just either stop listening to them, or if you so choose, look them square in the face and say, I'm sorry, you have no idea what the fuck you're talking about. You are a degenerate gambler, and you might actually have better luck going to Ruidoso Downs in New Mexico and laying bets on the ponies. Regardless, Kalshi won a high-profile lawsuit last year against the Commodity Futures Trading Commission, securing the right to offer election markets to the U.S. users. The ruling accelerated domestic growth, but opened new fronts with state regulators who view certain types of contracts as gambling products, rather than, of course, federally governed derivatives, which, as we just went through, is gambling. In May, the Commodity Futures Trading Commission moved to drop its appeal against Kalshi's victory in a case allowing the company to offer U.S. contracts on election outcomes. Still, the company has concurrent disputes with several state regulators who argue its contracts still fall under gambling statutes rather than commodities law. Let's bet on the price of onions, shall we? Months later, its rival Polymarket received approval from the same regulator to operate in the U.S. years after it was fined and pushed offshore over allegations that it failed to comply with the regulator's federal policies. I guess federal policies on what? Degenerate gambling? I don't know. But it is odd that Kalshi has completely overtaken Polymarket. An interesting dynamic to watch as we move forward. Another kind of gambling altogether from Kyle Baird, writing from The Block. Leveraged shares, which is the name of a company. Leveraged shares to debut first 3x Bitcoin and shitcoin number 1 ETFs in Europe amid retail-led crypto sell-off. Is it the right time to introduce this kind of product? Let's find out. Leveraged Shares is set to launch the very first 3x Bitcoin and shitcoin number 1 ETFs in Europe next week. The firm's 4 new ETPs, 3x long and 3x short products for both Bitcoin and shitcoin number 1 will list on Switzerland's SIX exchange, expanding a leveraged roster that already includes vehicles tied to semiconductors, AI, blue chip baskets, and single stock names. A leveraged ETF uses derivatives and debt to amplify the daily returns of the underlying security. Oh my God. It's like plumbing the depths of the most degenerate colon of humanity that you will ever find. Even gerbils cannot stand being this far down this asshole. This is ridiculous. Using derivatives and debt to amplify the daily returns of an underlying security. Hogwash. It's all hogwash. I'm adjusting my monocle and tipping my top hat here, and I'm going to twirl my mustache. Balchunas noted, this is Eric Balchunas, by the way, the timing is either really good or really bad, depending on your point of view, given the current market backdrop. That backdrop includes a sharp pullback in crypto ETF demand. Retail investors have withdrawn $4 billion from spot Bitcoin and shitcoin number one ETFs so far in November, already exceeding February's record outflows, according to JP Morgan. The bank's analyst said Bitcoin's drop below their estimated production cost support level of 94,000 has accelerated selling from non-crypto native retail holders of spot ETFs, even as perpetual futures deleveraging has stabilized since October. Meanwhile, retail investors have added roughly $96 billion to equity ETFs this month, including leveraged stock products, even as traditional markets edge lower. Everything's getting hammered, dude. The Vanguard S&P 500 ETF, the world's largest ETF with more than $700 billion in assets, slipped below $600 for the first time in over 2 months, about 5% off its late October peak. Crypto markets have been hit far harder. Bitcoin is down 35% from early October's all-time high above 126,000, while shitcoin number one, who cares? I don't care. Well, actually, it's fallen more than 43% over the same stretch, but honestly, all I care about is the Ether, the BTC Ether chart. I don't even look at Ether versus the USD. It's ridiculous. Anyway, 3x longs and shorts already prepackaged, which I find odd, right? I mean, remember BitMEX? I never did. I never actually got on BitMEX to go trade, but I could I could have, had I wanted to, selected my amount of leverage that I'm going to use when I'm degenerate gambling. It's very, very sad to watch humanity do this. That we got literally no grander goal in mind for something with the hardware that we've been given up in our skulls. Each one of us, 8 billion supercomputers walking around this planet, and we come up with McDonald's and derivative gambling and then regular gambling, most of which is illegal. That's the pinnacle right now. We used to have it. We used to have moonshots, space programs. We used to build cathedrals. We used to build whole towns that still stand to this day that people absolutely adore. The people that live there just take care of it, and nothing's changed since Roman times. Yet you can't build a brand new McDonald's and have it last any longer than 20 years before it needs to be bulldozed and rebuilt again, because that's the way it was actually built. It was built to degrade. It was built so that when they change their marketing plans in the future, they already have a plan to dispose of any of the old marketing culture that they might have, driven into the psyche of the people that are their customers. It's built to be destroyed. Cars are built to fall apart. Toasters are built to break. Vacuum cleaners are built to self-destruct. And we have supercomputers, 8 billion of them, walking around the planet, and this is what we come up with. Well done, sir. Well done. All right. I was going to read this one from John Carvalho, but it is Friday before the weekend of the week of Thanksgiving. So what I'm going to do is I've got all kinds of stuff that I got to go do. And I'm going to go do that instead of, and maybe I'll revisit John Carvalho. I do plan on cutting episodes of Bitcoin and during the week of Thanksgiving. I'm not going to leave you guys out in the wind to twist. All right. Thanksgiving Day, that one's for me, but tune in. I will be dropping episodes through the week of Thanksgiving, and I will see you then on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.